Hey, how's it going, everybody? My name is Steve Coleman, and I am kicking it old school today. Going to have a video that features primarily the spreadsheet that I use, where I can show you the purchases I plan on making, what's the state of all my different portfolio positions that I hold, as well as let's buy some stocks with a quick little live buy this morning. So let's get into it. So here you can see my portfolio. My current balance is $26,000. $338, almost $339. That primarily is made up my tax-free savings account. I also have a personal account where there's $108 in there, but that we don't talk about that one because I'm currently down negative 71%. So, made some different choices back when I first started, but the tax-free savings account is what we will focus on primarily. So just even looking down here, I've got $170 of cash to spend. Total dividends I've received so far, grand total is $1,568. I'm currently down negative 5.23%, which is $1,500. My average portfolio yield is good. It's 5.46%. So that's high. That's due to kind of a lot of different prices have gone down, and therefore I bought a lot more dividends on the cheap. And if I do nothing else, my annual dividends I will be receiving is $1,400, which translates to $119.29 a month, which I have up here demonstrated as well. And my yield on cost is 4.85%. So I think those numbers look healthy. I think they look great. So the next tab we'll look at is the tax-free savings account tracking. I've already gone into my activity and I've already recorded that I deposited some money, as well as I did receive a dividend from Royal Bank of Canada this morning for $17.16. So that gives us a little bit more money that we can use today. So then my next step that I go through in my process is I'll look at how my dividends are performing. Okay, so right now I have 5 positions that are in the green. Everything else is in the red. AREN and Bell Canada, they jump up and down depending on the week. So Royal Bank, Pizza right now is my top performing position. I'm currently up almost 19% on Pizza. Funny enough, this stock, when I told my wife I was buying into Pizza, she thought it was just because I like pizza, but I was like, no, there's some great potential here. Bought it when it was really low at the beginning of the pandemic, and it has recovered nicely, obviously. Royal Bank of Canada, the next one down is like 11.4%. Then we've got Diversified Royalty Corp, 4.28%, and they pay me right now basically $10 a month, which is great. I kind of wanted that to be nice and even. So there we go. Manulife Financial Corp, I put some money into them last week, and just to kind of start building that position a little bit more. I currently am just up 1.61%. RealCan up 0.51%. This one is another one that fluctuates up and down. So usually when it's down, I'll kind of below my average buying price, I'll try and buy more into it to get the $81 a year of distributions up higher, because I like to try and get all these to be over 100. I think that will look amazing. ACON, this was one that was it once upon a time was like negative 16% unrealized gains, but it has really done amazing and actually has become my highest performing stock right now. But compared to the average current buying price, it is still down just negative 0.5%. BCE, negative 2%. And then we get some into the double digits. So these are ones that are just still completely have not recovered from the economy, the way things are right now. The Vanguard ETF for the Canadian high dividend yield, it's down a negative 11%. This is one that we're going to put some money into today, because this is one I'm going to try and keep building up, and again trying to average down my cost as well. Brookfield Renewables, negative 11% as well. Bank of Nova Scotia down a negative 13%. I just recently put a little bit more money into there. Probably going to buy more of these stocks in the coming month to, again, try and get this annual dividend up to over $100. Algonquin, put a lot of money into this one. It has dropped its price significantly. It started to kind of creep back up, but not completely. So it's still at negative 17%. And again, we'll probably buy more into this one. Currently, it's up 7%. I try and keep my individual stocks pretty equally distributed, so around the 6% mark. So right now, Algonquin is higher than that. Energect, it is right at that 6% mark, but I'm down negative 20%. So for 82, you gotta get $82 of dividends each year. And Course Entertainment, this one, people, yeah, I'm not putting any money into Course. I got it to where I want to be, where $120 of dividends for the year. So that's like $30 a month. But yeah, I'm down negative 53%. So, ouch. This is one I probably will not do anything for a long time unless I have a large sum of money that I can spread around everything. But at some point, I will probably revisit Chorus. But again, I'm going to wait until we see how that company improves. Based on this, my plan is to buy some more of VDY because I'm just going to keep growing this position, get it around like the 25% mark as well. And if I actually jump over my dashboard, of course, now this view is huge. My plan was to buy 3 of VDY, 2 of INS. I did not account for the dividends that I was receiving, so I might actually just bump this up to 3. And that should just kind of, again, further increase that. Average it down our cost. Even though this is 6%, that's fine. That's the way things are. And here, how you can see, I have tried to keep things fairly evenly distributed, but obviously when some shares do well, it increases things that way. So as well, I am trying to have renewable energy be almost close to 25% of my portfolio. But again, it due to market fluctuations, I haven't quite reached that goal. So I want this 25%, renewable energy 25%, and then the remaining 50 can just be spread around. I really kind of want to get the financials down ever so slightly and spread that around a bit more. But that just takes time. Just keep plugging away, consistently putting money into the system, and that will happen. So let's go on to Wealthsimple Trade and make some purchases. Here we are in my tax-free savings account, where we can see that right now at 3 months, I'm at down negative 1%. But when I go look at the all-time, I'm down negative 6%, which is not cool. But we are investing for the long term, consistently putting $150 into the tax-free savings account to buy some positions, grow some dividends, because I am primarily a dividend investing guy. So that's my strategy. Dividends is my strategy. So that's why the Vanguard Canadian High Dividend Yield ETF is one that I'm interested in. Making sure that it is on my trade tax-free savings account here. And I'm going to buy 3 shares of this. And the markets are currently not open, but that's fine. We'll just buy these, and then we will jump back over and we will buy some IEN. So this is one, like, here's a 5-year view. It's kind of peaked at the beginning of 2021, which a lot of renewables did. And they've kind of gone down since then. So I am primarily averaging down my price and just trying to, buy for the dividends, really. So 5.24% dividend yield. And I will wait it out. I will wait till it kind of gets back up to its high. My average price right now is $17.23. So, it's in around this part. So I didn't buy it at its peak, but just, I'm still kind of where it's nice and steady. So I don't have as far up to go to recover all my costs. So we're going to buy 3 shares of INE, and I might not be able to, unless let's do a limit buy. So it is currently trading for $13, and let's just do it at that. There we go. So this one might not go through, but it could. So a limit buy, basically where you set the price that you want to purchase it at. I'm going to buy it at the price that it basically was at. If I really want to be crazy, I could like set this lower, just hoping that maybe like it does start off the day on a low. But market buys, limit buys, just kind of we just want to buy. We want to be able to get it and get those dividends in our portfolio as quickly as possible. So let's buy that on that limit buy, and we'll find out. So if it doesn't go through, if I don't get it today, the order will get canceled, and then I'll just have to try again tomorrow. So that there, my friends, is my tax-free savings account. 25 cents left in the account. So these orders have to kind of go through, and there will be probably a little bit of money that kind of jumps back into here because they do add a 5% increase. But here you can see all the positions. Again, the spreadsheet shows this just as easily, which is sometimes my preferred view, where I can see everything and do a better comparison than on the Wealthsimple interface, because I primarily use their app to do all my trading and just kind of look at things. But this is a good view as well, where we can see where things are at. So that's it, folks. I hope you enjoyed this video. If you did, give it a like, give it a thumbs up, which is the same thing. Subscribe if you want to join me on this journey. It's been going on for a while here. We started back in March of 2021, so we've learned quite a lot in the last 2 years. And I hope to keep sharing with you, and yeah, keep it in the green. We'll see you in the next one, and take care. Bye.